I know, I know. I'm a creative writing podcast, but hear me out. Just because I talk about creative writing doesn't mean that I can't also talk about stocks. It is my podcast after all. Plus, even though I'm not a professional, I still have experience due to investing for the past year, and have also taken 2 accounting classes. So, with that acknowledged, please keep in mind that I'm no professional. I don't have a degree, so just listen to what I am sharing if you want to. I'm only going to be making these episodes every 3 months, so don't worry about taking over the writing. This is just a bit of extra that I've wanted to start making episodes on and didn't want to create an entirely new podcast to do it. So, just a brief explanation. I am recording video for the people wondering. So, if you're on Spotify, YouTube, or Patreon, then you'll also be able to see the visuals as well. So let's get into a quick lesson before I show you my stocks. Now, when I turned 18, which was less than 2 months ago, I went to get myself a TFSA to start up for saving up for retirement, which for people who don't know stands for tax-free savings account, and it's the account that's used that Canadians use. However, I don't know what it's called in America. However, most people call it a tax-free investment account due to it being able to buy and sell stocks without fear of getting taxed on any of it. I technically have 3 TFSA accounts, one on my main bank, which I don't use because apparently the management fees are too high and would be a waste compared to other stocks on compared to other sites. And also, after I created my TFSA, I saw the portfolio items they were going to give me for the account. And so I showed it to my accounting teacher, and he was like, "Oh, these are horrible. This is what your main account were the and I was like, "Yeah." And then he told me about Questrade, which he like stands by wholeheartedly. I tried asking him his thoughts on Wealthsimple, but he just like was dead set on Questrade. Um, uh, and so we compared management fees, and I was like, "Oh, this is the management fee for my bank, which I'm not going to name." And then he's like, "What? That's insanely high." And then he told me the management fees for the Questrade account. And so I decided to start a Questrade account, and then I looked at and listened to podcasts talking about the difference between Questrade and Wealthsimple and what fits what you're looking for. And I found that I actually like the sound of Wealthsimple more because it actually like provides interest on things. But I decided to stick with Questrade as well, so I created a Wealthsimple and Questrade account. So Questrade, I didn't know actually doesn't give interest until after I put in my initial investment. And my initial investment was $1,000, which is also apparently the amount needed to start a Questrade account. While Wealthsimple, the minimum is like $1. Let's see. What was I saying? So I now have 2 TFSA accounts, and I will get more into them throughout this episode. So another is Wealthsimple, which I put my monthly investments into for it to grow in interest. The last one is Questrade, which I use for stocks. There is no limit to how many TFSA accounts you can have. However, there is a yearly contribution limit decided every year by the CRA, or Canadian Revenue Agency. If you go over that limit, then you'll be taxed 1% for every month based on the amount that you went over until you withdraw the extra amount. So if you over contribute by $200, and every month you'll be taxed $2. And yeah, contribution limits do, however, carry over into the next year. So if you had $1,000, sorry, I hit my mic, $1,000 remaining from last year, and this year, and the limit this year is 6,500, then your total limit this year would be 7,500. You can see how much space you have remaining on the CRA sites However, they only update it twice a year, so it is recommended to keep track of your contributions yourself. Some people do this by either writing it down or creating a spreadsheet to keep track of it all. I use the spreadsheet option, which I will gladly share with you all in just a few moments. A lot of people recommend maxing out your contribution limit. However, they fail to acknowledge that a majority of people cannot afford to do so. The way I'm doing it is by contributing $150 every month to Wealthsimple and contributing to Questrade whenever I want, or if I see a stock that I especially want to invest in. Questrade, unlike Wealthsimple, doesn't provide interest, so I don't invest in it as regularly. Oh, and I don't know if I had mentioned this yet, but opening multiple TFSA accounts doesn't mean that your contribution limit gets multiplied. It just all adds up together. So if you invest $100 in one TFSA and $100 in another, then your total contribution would be $200, meaning that your remaining contribution room is $6,300. There are also many things that can be held in TFSA, from cash to stocks, NFTs, cryptos, bonds, GICs, and so much more. Though on Questrade, the minimum investment to purchase a bond or GIC is $5,000. So best to just save up if you're planning on investing in it, and make sure to do your research. But what about the differences between RRSPs and TFSAs? Well, to start off, investing into a TFSA actually lowers the amount of taxes that you have to pay. So if you need to pay $500 in taxes, but invest $200 in your RRSP, then you'd only need to pay $300. However, unlike with a TFSA, an RRSP doesn't have a contribution limit. Well, sort of. Instead of having a set amount every year, it is instead decided by your income the previous year. So each person has their own unique limit. So if you made $3,000 last year, then you can contribute a maximum of $5,400. Also, an RRSP can only hold cash to gain interest, while a TFSA holds anything. Lots of people use a TFSA to buy stuff like cars, or as a vacation fund. However, I personally am using it towards retirement because I feel like that's the best option, because like the amount of years just builds it up even more. Meanwhile, a car would only be like 2-3 years if you're lucky. So I prefer using it for retirement. Though I will share this piece of my financial life plan with you all. In a few years, I will also open and start investing in another TFSA, which I will be putting towards my future child. Basically, a few years before the child is born, I'll buy a GIC, preferably a 5-year one, and invest in it every month, like invest in the TFSA every month. Preferably the same amount I'm investing in now, which is $150 a month. And that way it'll pay for needs such as diapers and other baby-related necessities. Then, once the baby is born, I'll invest in a 17-year GIC. I won't tell the kid the plan that I have for them or how much money I'm saving for them. Then, on their 17th birthday, I will show them how much money I've saved for them and tell them that they'll have a year to decide what they'd like to do with the money. Then, on their 18th birthday, I will withdraw the cash and send it to them as a gift. Then, they can decide to either put it in a TFSA or RSP, put it into their savings account, or just buy stuff with it. Hopefully not as much as the last one. That way, they'll get a good head start into adulthood and won't end up being financially reliable on me or their father. And I will hopefully be inspired to be and they will hopefully be inspired to do the same for their children. There's so much more that I wish to teach you all. However, that can be learned in either future episodes, like at the start of each episode, I will provide a quick lesson, then go into my stocks in progress. You can also look into other podcasts that focus on finance, just like search up stuff like finance or what you wish to know, like GICs or TFSAs. Alright, now let's quickly change the frame. There we go. And show you guys what it got. So this is my Questrade account. This is what my total equity is with a few bit of cash remaining. Go over the trading. All right. So as you guys can see, my net deposits is 1,150. So let's like my initial $1,000 investment, then a 150 afterwards. And so as you can see, it's not doing too great. That's for certain. That's primarily because we are in a recession, so you can't expect the stocks to be that good right now. However, if you've also noticed that the amount of equity is much lower than my net deposits, and that is because of the management fee. So for the amount of stocks you buy, there's also a small amount of money that they take off as a management fee. And so what I'm planning on doing is just letting my stocks grow up to a certain amount. So like Vanguard, I'm planning to let it grow up to like 400 and then I'm going to sell it. Hydro Run, I'm not sure if I'm going to sell or not because it's just so promising. Like, I'll show you guys the graph right now. It's not as promising as Waste Management, but yeah, you can see that's going to be a steady gain. It doesn't look too bad. It gives out dividends, which I look for a lot. I want either cash or stock dividends, which, like, pretty sure those are the only two dividends. But anyway. And then I'm also invested in Vanguard, which I think I'm going to sell at around 200, but this one is especially promising. Like if you're looking at the video right now, you can see how large of a growth it was. And also before I invested in it, I checked what this random pitfall was over here, and it's just because of a change in their regulations. So yeah, if you ever see like a sudden drop, just like look into the reason why. And like if you see a stock that has a drop around the time of COVID starting, legit, I do not even blame them for that. I blame no companies for that when I see a drop during the start of the pandemic. Cause like almost every single company, I've seen a lot of companies that were basically not even affected. And some companies that got better, like Netflix, of course. And then I also have this one. I'm not as confident about the Clearway Energy one. And I'm pretty sure you can see why. It's just barely an improvement from their July of 2014, it looks like. Yeah. And so I'm just not as confident about this one. Once it hits a profit, I am planning on selling it because I'm not as confident about it. I have a bunch of other like natural solar energy stocks I'm invested in that I have set waitlisted because this one I did not put enough research into or didn't like look into enough because I regretted it several days after buying it. Oh yeah, and also my first week of investing, I gained like $30, and now I'm at a loss, which is to be expected in the stock market, especially during a recession. But yeah, once this one's a profit and I can count on being able to make more money off it even after the management fee, I'm planning on selling it. And the reason why I actually want to invest in natural energy sources is primarily because once we get rid of our non-renewable energies like fossil fuels, phosphorus, all that stuff, I think phosphorus is the correct word, lithium, all that stuff, then basically those stocks are going to drop right down. So I want to invest not only in renewable energy stocks because it's good for the environment, but I also want to invest in it because I know that sort of establishment is going to grow several times over in the future, long after the non-renewable sources are gone. Because once the non-renewable sources are gone, the renewable sources will have to take over in their place. And also you can see it right here. Like, not every single stock did worse at the start of COVID. For some reason, this one shot right up over the course of several months. Not even an entire year. I think that's like 10 months. It just went from $17 to $30, basically. Yeah. So that are my stocks. And of course, you gotta invest in Vanguard, like, obviously. Uh, yeah, dividends are over $1. I have only one stock in Vanguard, but like one is all you'll need in order to get your foot in the door. Like you can see their growth. Like sure, when all the stocks are down, you can count on Vanguard being down too. But Vanguard, you can see in the graph, Vanguard's amazing. I'm talking like I've just been called out on being terrible at the stock market when in reality I'm just stuttering. All right, let's move on to Wealthsimple. I could have sworn I just logged in. All right, let's log in again. This one. All right, so this is the Wealthsimple, the one that I invest 150 in every month. As you can see, I've got only in month 2 now because it turned 18 last month. And so as you can see, it's not a perfect 300, and that's because, like I've said multiple times throughout this episode already, we're in a recession. You can expect stuff to go down. But nonetheless, when it's up, it's up. So yeah, I'm planning on investing $150 every month into this account. I don't recommend using the Wealthsimple contribution room calculator to keep track of your investments because it's far more confusing. And also, if you just look right here, if I can scroll, even with my just total investment of $300, when I turn 65, this account will be at $6,920. So yeah, let's see. I can actually show you guys from this account. There it is. I can show you guys how much it's going to grow over the course of a few months. Yeah, just select a random account, 150. Just this once. No, monthly. And so, as you can see on my screen by the giant gain, I will be just under 300K by the time I turn 65. And so, yeah. Compared is it come or come? Compared to other banks like RBC, for instance. Let's see, RBC TFSA calculator. Because keep in mind, RBC also has like, what was I thinking of? Also has the high management fees. Meanwhile, this one, you just like pay to invest your money, and that's basically it. Sort of. There are some management fees here and there, but it's not really much. So let's see. Let's select Ontario, annual income. I don't remember what my annual income. Let's just type in some random numbers. Contribution amount. So that'll be $1,000. Because in a few months, I'm planning, like after I move, to invest that $1,000 into it. But for now, I am sticking with the 150 until I'm able to invest another 1,000. And I'll be 65 in 47 years. And so, let's see. So yeah, it's a little bit higher. Oh, was I looking at the wrong area? Oh, I was. Cool. Alright, so it'll be a little bit over 3,015, but also you gotta keep in mind this one actually has the initial investment on it, so starting contribution amount. So it will actually, and if I was able to put the initial investment on this calculator, then I'm confident it would be much higher. But yeah. And also there's also the instance where I invest more than 150 into it whenever like there's been a large amount of income. And now let's actually move on to my budgeting sheet. I know there's not much on it right now. I forgot to add the May one, did I? You're April. Are you April? Why are you saying you're January? You're not January. Aren't you April? No, you're May. I see. I must have selected day and then month, not month and then day. Okay. Yeah. You. There we go. That makes more sense. Alright, so as you guys can see, I have investment total of 1,150 with 1,500 in Quest Trade. And that means my day one total contributions would be 1,300, and then month two will be 1,450, which I've set up as a calculator in order to equate. So this is the starting contribution, and then that's basically this minus this equals this, and then this is this minus this equals this. I'm sorry to the audio listeners. So basically it's just going downwards, so the contribution room remaining declines while the total contribution increases. So it keeps track of everything amazingly. It's really good. I highly recommend using both. It might be a little difficult if you're going on Quest Trade and you don't really know much about stocks. I guess I could give some advice. Perhaps I should wait until next month to give advice. Although technically I did give advice because I said definitely invest in Vanguard. So yeah, let's go back real quick. Oh yeah, and also dividends are coming out soon from Waste Management, which I recommend. Waste Management is amazing stock. I know it says it's down 4.17 right now, but recession. But yeah, I guess I've been saying recession enough times, so probably best to get back to ending the video now. Alright, so, and that is my experience with the stock market so far. I hope you all enjoyed it. Though it won't be a monthly update, I do feel as though it would be nice to still update every quarter. So just map it out, so it's just like to map it out for you. The quarters are quarter 1, January, February, March, quarter 2, April, May, June, quarter 3, July, August, September, and quarter 4, October, November, December. So you'll be able to see a new episode based on my stocks updates sometime in those months per quarter. So which means that every few months you'll be able to see how I've progressed and if I've made any changes, as well as be taught a quick lesson and even potentially learn along with me. So how about we get to writing and get in that bag? Check out my novels Death Trail, Flame Rip, and Arctic Blaze on Amazon and Kobo, link in description. Check out the Crave Writing Club Premium on Patreon and Spotify in the description. Check out the Crave Writing Club Discord server in the description. Check out my personal Instagram at dark_night_wolves. And let's bring this financially rich meeting to an end.